Hello everyone and welcome to our 189th weekly webinar series today. I am very pleased that this new innovative virtual forum has been so well received. It has given us an opportunity to scale the event to a wider community and be even more inclusive. It is a notable achievement to mark 51 months of cooperation between AABN members, entrepreneurial community, professionals from various fields to leverage AABN as critical driver of development. Since the launch on 27 June 2020, the forum has garnered a lot of interest and excitement from all regions of the world. The forum has had the best balance of participation, both in terms of members, regions, and gender. From the beginning, our goal has remained the same, to help entrepreneur community to replicate examples of good and sustainable use of AABN and to encourage everyone to make good and timely use of the rich database available. As we move forward with strategic plans to ensure AABN's future, we will continue to invest in the vast potential inherent in collaboration among individuals of varying backgrounds, perspectives, and expertise. How are investment decisions made? What is value? What are the key financial metrics? Financial success and stability often hinge on a good understanding of the balance sheet, income statement, and cash flow statements. Successful career progression is often dependent on understanding the basics of finance and accounting. We need to manage and discuss budgets, navigate financial reports, explore performance indicators. Our Finance and Accounting for Non-Finance Managers webinar equips you to diagnose and communicate financial problems more effectively. In learning the basics of accounting, financial terminology, and financial analysis, you will understand how to identify relevant financial information and apply the analytical skills needed to make better and more informed business decisions. Our distinguished guest speaker, Mr. Suhas Harshe, will help professionals, especially from functional areas other than finance, to gain an extensive working knowledge of critical financial principles in an easy-to-flow manner, enabling them to make critical business decisions involving cost savings, budget, new project decisions, growth strategies, and so on. Participants are able to understand and analyze financial statements as well as grasp the basic fundamentals of finance and accounting. I have the pleasant duty of introducing and welcoming our guest speaker, Mr. Suhas Harshe. He will speak under the topic, Numbers Don't Lie. Let us welcome him to this interactive business networking session. Suhas Harshe helps entrepreneurs build cash-rich companies through his business finance coaching, even if they don't understand finance. His Profit Multiplier program supports increasing profits by shifting an organizational focus from sales to profits, improving cash flows, and optimizing working capital. Suhas Harshe works with MSME businesses across sectors, having a turnover between 10 crores to 100 crores, but not having their own finance manager. The Profit Multiplier program is designed to build debt-free and cash-rich companies that enable the owners to achieve financial freedom with the promise of achieving 10x profits in 10 years. Suhas Harshe has 25 years of experience with brands like Kotak Group, DHL Worldwide Express, and Godrej in leadership roles. Suhas Harshe started coaching as a money coach and became India's first money coach. Suhas Harshe has developed a unique financial approach called Profit First that simplifies finance for business owners so that they get control over their finances instead of the finances controlling them. Suhas Harshe conducts Numbers Don't Lie, a money management workshop for top executives and professionals. Suhas Harshe also speaks on money management through his seminars, Simplifying Finance for Entrepreneurs, and Finance, Making Sense of Finance. This has helped Suhas Harshe be recognized as one of the top 5 financial advisors in India. I have a compulsion for completion and an innate, insatiable need for closure because we are uncomfortable with uncertainty. I present this challenge to you to help us come out of this session, not merely knowing more and feeling better, but with a concrete agenda for action. Now, ladies and gentlemen, I'm going to cut short this title track and welcome Mr. Suhas Harshe. Over to you, Mr. Suhas.
Thank you, Mr. Gopi. Thank you so much for that wonderful introduction. Hope I'm able to make myself loud and clear. Everybody can hear me?
Yes, sir.
Okay. First of all, I would like to thank Mr. Rajendra Sapre, who is also part of your group. He's present today to get me connected to this wonderful group through Mr. Gopi. Incidentally, he was a participant in one of my one-day workshop about a couple of months back. And that is where he got an idea that maybe this message which I was teaching at that workshop needs to be percolated to more and more people who struggle with understanding finance. And that gave me an opportunity to be here in front of you to present with you my small talk, Numbers Don't Lie. The reason I've given this name, Numbers Don't Lie, is basically because one is most of the people and entrepreneurs shy away from numbers, accounting, and finance. And we also do confuse things between numbers, accounting, and finance. I'm going to be very, very clear and very, very basic at a fundamental level. I'm going to clear out a few things which, because of that lack of clarity, a lot of entrepreneurs struggle in terms of managing finances in their businesses. So allow me to share my screen and we can get started with the formal presentation. So if you can see my screen, just give me an okay.
Okay, sir. Yes, okay, sir.
Yeah, so we'll formally begin with the topic today, which is Numbers Don't Lie. I have a quick question to all the audiences who are present here today. How many of you are finance person? Please raise your hands. There are not many hands that I see going up, and that is something which is expected. But the thing is, everyone in this room is a finance person. Everyone in this room is a finance person because we are all constantly making all financial decisions, whether we realize it or not. I'll give us a couple of examples. Do you take a decision to hire somebody or not? Do you take a decision whether you will have an office on rent or you will have an office which is owned by you? Do you take a decision of how much I should price my product or service? Do you take a decision on whether you should run a marketing campaign or a sales program? Do you take a decision whether you should conduct a Diwali sale? Or do you take a decision whether you set up a new branch or a new business or a new vertical or a new division? Now, all these decisions which you take on a daily basis, day in and day out as a business owner, are financial decisions only, whether you realize that or not. So you getting an impression that you are not a finance person is itself a wrong impression that you carry for yourself. Every person in this room, every person running a business is a finance person. As a business owner, you are not a non-finance person. At the most, you are a non-accounting person. Now, let us be clear about this distinction. You are not a non-finance person because you are taking financial decisions day in and day out. What you confuse yourself with is, I don't understand accounts. I don't understand entries. I don't understand statements. I don't understand tally. I don't understand balance sheet. I don't understand cash flow statement. And you confuse yourself thinking that just because you're a non-accounting person, you consider yourself to be a non-finance person. Both are different. You may not understand accounting, which is perfectly okay for years together running a business, but you can still understand finance. And today, in the next 45 to 60 minutes, I'm going to give you enough understanding and enough knowledge and enough expertise where you will be able to understand the basics of finance only in the next 60 minutes. So let us make one distinction very clear. Finance starts where accounting ends. Finance and accounting are different. They are not interchangeable. They are not to be confused with one another. Accounts is the process of creating financial statements, summarizing all your financial transactions in a very structured way and put them into a profit and loss statement or a balance sheet or a cash flow statement. And that is the role of the accounting. Accounting does something which is a post-mortem. They do a process on something which has already happened, recording a transaction which has happened, a decision which has already been taken and put it into a particular form to be presented to either the business owner or to the authorities or to the government or to the tax authorities in terms of a proper statement. Finance is something where you take accounting statements and then you move forward to actually take financial decisions to take care of your future. You don't rely on the past. As a business owner, your responsibility is to build a profitable business. And this is where I'm going to focus all my attention on is you are not in the business of just running a business. You are in the business of running a profitable business. The main purpose of starting a business is to earn profits. If you have any other purpose in mind, then let me tell you a little bit more, upfront, you are not running a business. Entrepreneurs blunder by focusing more on sales. Sales बढ़ाना है, marketing करना है, sales बढ़ाना है, marketing करना है, sales बढ़ाना है. That is the only thing that they do day in and day out. And they feel if they focus on sale, everything else will get taken care of, which is not correct. They don't focus on profit. I'll ask you a very simple question here is, today we are on 13th of October. How many of you know as entrepreneurs, what was the sale that you did last month in your business? Most of you will know what are the sales figure of your last month. My second question here is, how many of you know how much profit you did your last month? And I know there will be a blank that I will see. You know your sales figures every day, every week, every month, every quarter, every year. If I ask the same question, whether do you know your profits for last month or last quarter, you are not in a position to do that. Now, my question here is, then what is the purpose of running a business if you are not knowing whether you are making profits or whether you are running a profitable business or? Unfortunately, you would not know if either you have made a profit unless somebody presents you a profit and loss statement. And that happens once a year, most of the cases. You do all this struggle, you keep on running all the year round. And at the end of the year, you sit with your accountant or an auditor or a chartered accountant, and then you realize whether you have made a profit or loss. Till that time, you're running in the black hole. You're not even aware what kind of business are you doing. Now, is that the way to run business? That's my very straightforward question to this August gathering here who are entrepreneurs. Now, let us look at profit and loss statement in the most simple manner. I don't know how many of you look at your profit and loss statement once a month, once a quarter, or only once a year. But let us I'm trying to keep things very, very simple out here. On one side, you actually make note of all expenses, and on the other side, you make note of all the income. Now, on the income side, the sales figures, your turnover is what comes at the top, and there comes the other income. And on the expenses side, you will have all kinds of expenses under different heads: materials, wages, salaries, marketing expense, admin expense, interest, whatever it is. And then you will have profit at the bottom on the left-hand side of the column, which is the profit. It will not be on the right-hand side. The profit will be mentioned on the left-hand side. And because of the placement of these two figures, sales being at the top and profit being at the bottom, sales is known as top line and profit is known as bottom line. There is no rocket science. There is no mystery in this, that why top line is called top line and why bottom line is called bottom. The thing is, entrepreneurs don't take home sales. They take home their profit figures. But still, as entrepreneurs, we make the mistake of focusing only on sales and not on the profits that we are either generating or not generating on a regular basis. And that is where people struggle in their businesses. That has been my observation of last so many years. Now let us look at a balance sheet. Liabilities are what a business owes. That we understand. I mean, something which I owe is a liability, something which I own is an asset. But whenever a business needs money, it borrows. Business does not have money of its own. It borrows from the owners at the beginning of the business, which is known as capital. I'm using this terminology very, very carefully. A business borrows from the owners, and that is called capital. For financial purposes, the owner is separate and distinct from business. This is another mistake people make. This is another mistake a solo entrepreneur makes. This is another mistake an MSME or a SME businessman makes, where it doesn't distinguish himself between him as a person or the owner and him as a business. Business and owners are separate entities. You as a business owner are an individual. A business is a legal entity which you own and which has a different function altogether. If you do not remember this distinction between yourself and the business, you will have financial difficulties. Now let us look at a balance sheet. Balance sheet को मैं इतना simplify कर रहा हूँ. You may have the most complicated balance sheet in front of you also, but I can make it simple by saying there are only 6 components in a balance sheet. Only 6. Anything and everything can be summarized or can be accommodated or can be put in place under this 6 heading. There is one thing which is not here, which I'll talk to you later. First is capital, the amount of money that the owner has put into the business. Second is loans, the money which has been taken from outsiders and not from the business owner. Third is current liabilities, which are your creditors, bank overdrafts, and other things. These are the liabilities part. The asset parts are only fixed assets and current assets. Fixed assets are your land, machinery, building, etc. And current assets are your debtors, inventory, cash balances, and stuff like that. Now, your entire balance sheet, howsoever complicated it may be, 10 पन्ने का होगा या 100 पन्ने का होगा balance sheet, you can actually simplify it and make it as simple as what I have shown you on the screen right now to understand it better. Now, between the profit and loss and the balance sheet, there are only 4 types of transactions. Now, I'm trying to make things very simple for you to understand that you feel you don't understand account, but I will make you understand accounting in 10 minutes. Any transaction which happens in your business, any transaction, there are only 4 types of transactions which happen. Either that transaction will be an expense, either it will be an income, either it will be a liability, or it will be an asset. There is nothing beyond that. You bring any transaction which you think of, it can be actually accommodated into these 4 places only. And there are only 4 possibilities that any transaction can take place. Now, all financial transactions, I said there are 4 types, can further be broken up only into 2. Either money is coming in or either money is going out. There is nothing else. There is no complication. There is nothing to be, thinking beyond these 2. कोई भी ट्रांजैक्शन है तो या तो पैसा अंदर आ रहा है या तो पैसा बाहर जा रहा है, उसके सिवा कुछ नहीं हो रहा है. If the money comes in, then it can be further classified into only 2 things. Either it is income or it is a liability. Now, just pay focus on the second word. When the money is coming in, it can be either income or it is a liability. I'll explain you in a few minutes. And if the money is going out, it is either expense or it is an asset. Money going out is also an asset. How? Let me explain. In a profit and loss statement, I just show you the profit and loss format. On the left side are expenses, on the right side is income. Income is sales. Money coming in, which is sales. When you make a sale, you get money coming in, which is your credit side, which is the blue part. The money is coming in to your business. And in the expenses side, which is the red arrow, money going out, whether in terms of purchase of raw material, whether in terms of salaries, whether in terms of interest. So in a profit and loss statement, it's very easy to recollect that, okay, money coming in obviously is sales or some other income. Money going out is obviously expense. But when you come to balance sheet, that is where the gadbad starts. On the liabilities side, you have money coming in, When the money coming in, I said either it is income or it is liability. How is it a liability? Now you have money coming in. First is capital. Now, as an owner, you have put in your money into the business. For a business, it is the money coming in as a capital. Reserves and surplus are also part of undistributed profits, so I'm just leaving it at that. Long-term loans. Now, you may have a confusion. Loan is a liability, is understood. But then liabilities are something where I'm supposed to pay money out. That is not the case. When you look at the transaction, when you take the loan, you get money coming in as the first amount of the loan which is coming into the system, right? Then you repay it over a period of time. I'm not talking of that. In terms of liability, it is money coming in. Creditors is where you have not paid the, you are supposed to pay the amount, but you have not paid. So that is also money which is lying with you. Bank overdraft is also something which is, a bank gives an overdraft and you use that money which is available to you for use. In terms of assets, fixed assets, they are assets. You own them. But how do you create assets in the first place? How do you build a building? How do you purchase a machinery? How do you create an inventory? By paying out the money to somebody else. You create a building by actually money going out. You have created an asset. You have taken the capital. From capital, you have created a building, you have created a plant, you have created some machinery, and so on and so forth. But the money has gone out of the business. So for the assets to be created, the money goes out from the system. And that is how assets are created. And which is why, yes. And in terms of current assets also, you build up an inventory by paying out for building up that inventory. Receivables is also something where you have sold something and then you are waiting for the money to come in. Bank balance is also you have sold something and then you have built up that bank balance. Now, if you understand this sheet which is in front of you, which will explain to you profit and loss statement and balance sheet in the most simplest form possible, you will understand finance. इसके आगे आपको finance सीखने की जरूरत नहीं है life में. Income and expense statement. Income is money coming in. Expenses is money going out. Balance sheet absolutely ulta. Liabilities is money coming in. Assets is money going out. If you understand this very clearly, and any transaction which is taking place in your business, if you're able to kind of visualize that whether this transaction, whether it is money going out, if it is money going out, then whether it is expense or whether it is asset. And if it is money coming in, whether it is in the form of income or is it in the form of liability. आपने ये समझ लिया clearly, you know finance. Finance में इससे आगे कुछ नहीं है. There is nothing complicated in. Now let us see whether you understand profits. Here is an example where a new business, general understanding of profit is income minus expenses. Here is a new business which has done few transactions. They have purchased a machinery of 5 lakhs. They have purchased a raw material of 2 lakhs. They have paid salaries of 50,000 and they have sold products worth 4 lakhs. Now, whether this company has made profit or a loss, it has earned 4 lakhs and it has spent 7.5 lakhs. So prima facie, if you look at it, it seems it has made a loss. But let us look at it a little differently. Expense and expenditure are two different things. And you will actually see this, your accountant or your CA mentioning these two things separately, but you always get confused between expense and expenditure. Expenditure is outflow of money. And outflow of money, as we saw, can either be in terms of expense or an asset. Expenditure is broader in scope. Expenditure covers both expenses and asset. So expenditure is broader. Expenses is a part of expenditure because expenditure also covers assets when the money is going out. Now, to arrive at profit, we first split expenditure into two components, either asset or expense, as we saw 2 minutes ago. Profit is not money coming in less money going out. That is a very wrong way of understanding profits. Money received also has to be separated into income and liability. Money spent has to be differentiated into expense and assets. And income less expenses will give us profits. This is the reason we prepare two financial statements. There is not only one financial statement. Let me illustrate a little bit more. You have spent 5 lakhs on machinery. Is it an expense or an asset? It appears to be an asset. Money going out can be either expense or asset, but this is an asset. Money spent on raw materials and salaries. Expensive or assets? Expensive, very clearly understood. Sales, no doubt, is income. Now let us look at this thing once again. You have a profit and loss statement at the top and you have a balance sheet at the bottom. Raw materials, salaries are expenses. Income is 4 lakhs. You have made a profit of 1.5 lakhs on a sale of 4 lakhs. And balance sheet is showing the machinery as an asset of worth 5 lakhs. Income is 4 lakhs. Expense is 2.5 lakhs. And profit is 1.5 lakhs. Hope this is making things very clear. Profit and money are two different things. Let us not confuse between the two. Income is 4 lakhs. Total expenditure is 7.5 lakhs. There is a negative bank balance of 3.5 lakhs. Yet you have made a profit of 1.5 lakhs. Never confuse money with profits. The reason I'm spending this time here to explain this is because we have this issue as business owners that was at the end of the year when we prepare our statement, our auditor says you have made a profit of X amount. And then you look at your bank balance and it shows Y amount. And there is no correlation between the two. And you are confused. He is saying I've made a profit of so and so. I have accounted every transaction in the last financial year. And my bank balance is showing something different, which invariably is less than what the profit is shown on the books. This is because of this difference. Profit is different. Money in the bank is different. So now the question here is, are you in the business of making profits or are you in the business of making money? If I had asked you this question 10 minutes ago, everybody would have said we are in the business of making profits. Now our understanding has gone a little bit higher. We will take a pause before answering this question. Since profit doesn't automatically mean money, attention must be paid to generating cash. The biggest challenge that business owners face. Only half the battle is won when you make profits. The other half will be won when you generate cash. So profitable business on paper is of no use until and unless you have cash to back it up. Cash flow, cash in the business, cash flowing in and out of business is as important as making profits in the business. There are two things which basically make a successful business. One is ability to generate profits, which we spoke about, and the other is manage cash flows, where major people struggle, major business owners struggle. I have a situation where people who are business owners for a long period of time do not even know the difference between what is profit and what is cash flow. As a statutory requirement, at the end of the year, you do prepare a profit and loss statement and you do prepare a balance sheet and you submit it to the government during the finalization of your accounts, which we just finished on 30th of September. I rarely come across a business owner who also prepares a cash flow statement on a regular basis. Many people don't even know that there is something called a cash flow statement, which is as important as your profit and loss statement and your balance sheet. Now, this is one question which gets asked to me a lot of times. That boss, the reason we don't take loans, the reason we don't know whether we should take loans to run our business, the reason we don't take loans but keep on pumping our money is because we are not very sure, number one, whether we are in a position to pay the interest of the loan. That is, whether my business is equipped to take the burden of interest, burden of taking the loan and running the business. And that is why I prefer to put in my money as far as possible. Now let us look at two scenarios. There are two scenarios which many business people face. And in one scenario A, the owners have put in their equity of 15 lakhs and they have taken loan of 5 lakhs to run a business. In scenario B, they have put in their own money 5 lakhs, but they have taken a loan of 15 lakhs. And the total capital employed, because loan is also taken to run the business, the total capital employed in both the cases is 20 lakhs. In scenario A, 15 lakhs owner's money, 5 lakhs loan. Scenario B, 5 lakhs owner's money, 15 lakhs ka loan. 20 lakhs is being deployed to run the business. Now let us look at how things actually follow. Sales is the top line. You remove direct expenses and you come to gross profits. Then you remove indirect expenses. Now, I'll not get into details of that. They are relevant at this point in time. And then you come to profit before interest and tax, PBIT, or what is known as operating profit, gross profit, operating profit. The first thing that gets deducted after PBIT is interest, which you have paid on the loans that you have taken. So PBIT now becomes PBT, profit before tax. On this amount, you pay income tax to the government. That gives you profit after tax. And only after you arrive at this profit after tax, the owner has access to that money, whether he takes it in the form of a dividend, he takes home, or he doesn't take those profits, he retains them in the business and transfers them to reserves and surpluses. Now let us look at this very carefully. Interest पहले जाता है, income tax बाद में जाता है, और ओनर को प्रॉफिट बाद में सबसे लास्ट में मिलता है. Now let us look at these two scenarios once again. Scenario A, owner's money 15 lakhs, 5 lakhs of loan, total capital employed 20 lakhs. Let us say they run a business with a profit of 30%. So the profit is 6 lakhs on 20 lakhs of capital employed. 5 lakhs का loan लिया है, so interest is 50,000. So you remove interest first from PBIT. Profit before tax becomes 5.5 lakhs. Assume corporate tax at 40%. 2,20,000 is the profit. Profit after tax is 3,30,000 in scenario A. I run the scenario B in the similar fashion. Profit after tax is 2,70,000. Now my question to the audience here is, what is the business that you would prefer to run? Whether it is scenario A or whether it is scenario B you would prefer. Profit after tax of A is higher than profit after tax of B. Now I know for sure 90% of you will say I would prefer scenario A because profit after tax is higher. Now let us look at this in a different way. Let us look at it from an earning per share, because your shareholding, which is in total amount, is in terms of number of shares. Profit after tax is 3,30,000 in scenario A, 2,70,000 in scenario B, but number of shares in scenario A is 15,000 because your capital is 15 lakhs. And in scenario B, your number of shares is 5,000. Earning per share in scenario A is 22. Earning per share in scenario B is 54. Now, how is this possible? What is this magic? Even though B earns lower PAT, profit after tax, it enjoys a higher earning per share at 54 compared to A, which a higher profit after tax but lower EPS. Why? Why is this happening? It is happening precisely because scenario A, you have more owners' money into the business, and you are running the business by taking more loan. Less loan. In scenario B, you have less owners' capital which is involved in the business, and you are running the business by taking more loans, borrowing money from outside. Now, the question here is, or my humble insight or the thing which I would like to share with you here is, whether you reach a stage where you have to decide whether you should take loan and run your business or you should pump in your money or loan your business, will decide on only two things. And that is something which you have to be very clear at the beginning of starting a business as far as possible. Even if you are running a business, you should have the end point in front of you. If you are running a business to sell, you intend to sell this business sometime in the future, you should be focusing on scenario A, where you put in your money more. In scenario A, you are investing more business, and that is increasing the value of the business. Profitability may be lower, but valuation will still be higher. I'm not getting into how the valuation is occurred because that's a complicated and something different. When you sell the business, you will get more value for a business which is of A type. If you want to run business forever, or you want to transfer it to the next generation also, you should be following the scenario B, which is put in as less money of your own as possible and try to borrow as much as possible, as much as people are ready to give you money and as much as your business can sustain the interest cost. The reason is the first point, cost of borrowing is less than owner's fund. Now, the biggest mistake people make as owners is they consider the cost of their capital which they are introducing into the business as zero. They feel that capital is free. They feel it is their responsibility that I have to introduce the capital without which how the business will start. They feel it is their obligation to keep on pumping capital whenever they feel the business needs that amount to grow the business instead of borrowing from outside. एक डर रहता है outside से लूंगा, wait, there is a burden on the head that there is a loan on my head, there is a liability, रात को नींद नहीं आएगी, interest payment करना है, blah blah, this. But that is because 99% of the people, and I say this with full confidence, do not know the cost of their own capital. Now, if I get into the calculation of cost of capital, which is a different topic and which will take me 1 hour, you will lose your sleep. 100% you will lose your sleep. If I tell you what is the cost of the capital which is costing you, which you consider to be free. In scenario B, profitability is more, earning per share is more because cost of borrowing is less. And you enjoy higher profits, earning per share is more. So if you want to run business for a longer time, forever, as a business owner, you choose scenario B, which my suggestion to you here is use OPM, other people's money. Do business by other people's money, not your money. That is my message from this. Now I would like to share with you 3 secrets to earn more profits. Now, you may be employing 1 or 2 secrets, but you would not be employing 3 secrets at the same time. I'm sure about it. Secret number 1. So scenario A has more of the owner's money. Scenario B, where more amount is borrowed. Owner's money is the most expensive source of money. It is not free. What was the profit which is generated? It was generated at 30%. So in scenario B, the profit was generated at 30% of for 5 lakh worth of shareholders. B also earns a 30% on the borrowed 15 lakhs, for which he is only paying 10%. The difference between 10% outflow as interest and 30% profit, that 20% is accruing and going to the owner's pocket, which is why your earning per share in scenario B is higher, though your own capital is lower, because आप दूसरों के पैसे से धंधा कर रहे हो. You are using the money of other people's money, which is costing you less than the profit you are generating in your business, and the difference is what you are getting as an extra benefit. In B, earns 30% on 5 lakhs, which is his own money, and 20% on 15 lakhs also. You've seen this. Now here is the first secret. What is the first outflow after profit and PBIT? The interest component goes out, which means that interest of cost of borrowing appears before the payment of tax. And that's why dividends are paid from profits which are after tax. What I'm trying to say here is interest is pre-tax, dividends are post-tax. Interest is a tax deductible item, and dividends are paid out of after-tax profits. Interests are tax deductible, dividends are not. So now what happens here is interest at 10% is substantially cheaper than owner's funds, and on top of that you get tax deduction also, which makes interest even cheaper. So this fear that let me not take a loan and the burden of paying interest, you should try to modify that thinking going forward. If you are able to get loans, you can take that loan and do business. It will be a profitable way of doing business because the interest cost is actually lower than what you anticipate. The second thing is owners and CEOs are aware of their sales turnover, but most of them are unaware of their bottom line. Now, the proportion of fixed cost to variable cost can vary, impact your bottom line. Leverage is the name given to disproportionate change in the bottom line of an organization to a certain change in top line. Higher the fixed cost, higher the profit. Now, there is a caveat to this. This applies in a growing business. It doesn't apply in the business which is going down. Now, the question here is, how can you say कि higher the fixed cost, higher the profit? Now, this is also a separate topic, but I'll explain to you in a very brief way. Suppose you did a turnover of, say, 100 rupees last year, and you did a profit of 10 rupees last year. This year, you have done a turnover of 200 rupees. What should be your profit? Should it be 20? Should it be more than 20? Or should it be less than 20? Now, if your turnover has moved from 100 to 200 and your profit has moved from 10 to 20, there is something wrong with your business. If the profit has moved from 20 instead of 20, it is less than 20, there is something seriously wrong with your business. And if your profit is more than 20, then you are actually running a profitable business. But the very simple reason is when your turnover moved from 100 to 200, in 100 you made a profit of 90, which means 90, you made a profit of 10, which means 90 was your expenses, cost. That cost was also fixed cost and variable cost. When you move from 100 to 200, your fixed cost, let us say, was 50 and variable was 40. Will that 50 go to 100 when your turnover is 200? No, it will grow marginally. your variable cost will go from 40 to 100 when your turnover goes from 100 to 200. So if your fixed cost moves from say 50 to 70, your variable cost moves from 40 to 80. On a turnover of 200, your profit should move from 10 to 50, should not remain at 20. Hope I'm making myself clear. So higher the fixed cost, higher the profit, because variable cost keeps on rising as the turnover rises. Now we said there are two successful principles which are applicable to manage successful businesses. One is the ability to generate profits. Another is to manage cash flows, a neglected topic. Cash flow is to business what blood is to human body. It has to circulate. Do you know what happens to the human body when the blood stops circulating? You get a brain clot, you get a blood clot, and you get a brain hemorrhage, and you get a paralysis of the body. Similarly, if the cash stops flowing in your business, you are running towards a serious situation where your business may become paralyzed. Now, assets take holidays, liabilities don't. What do I mean by that? Liabilities is loans. When you were facing the COVID situation, your rents didn't stop, your loans interest didn't stop, your salaries to your people whom you wanted to retain didn't stop, but your income stopped. So this is where you face the issue with cash flows. Now I'm going to share with you a very simple cash flow management system, which is in front of your screen. If you're able to follow this in your business, you will have solved majority of your cash flow problems. It says 4 columns. First column is money now. Second column is money monthly. Third column is money quarterly. And fourth column is money in the future. Now let me explain to this. Money now is something for people who are running a business regularly, but who get one-off customers. Cash business. This is something basically a difference between cash sales and credit sales. So money now is cash sales. That is the money which is you are able to access right now. So at the beginning of the month, plot out based on your previous experiences of your money or a business that you are running, how much of cash sales you are expecting this month. Money monthly is something which is your regular credit sales, for which maybe you are running a credit term of 30 days. So क्रेडिट सेल्स कितना होने वाला है, या पिछले महीने का क्रेडिट सेल आपने कितना किया जिसका पैसा इस महीने आपको मिलने. So you will have money now, which is your cash sale, which is money which you are going to get this month itself. Money monthly will be credit sale of last month, but money coming into your system this month as a payment. Money quarterly will be either you are doing some business with some long-term terms also of credit, or you have some people debtors who take more than 30 days, take up to 90 days also. Or you have some very, very special customers where you have an extended credit with them. So that money is going to come at a later date, money quarterly. And money in the future is something where you are starting a new business, a new product, a new vertical, and you're investing money right now, but that money from that business is going to come in the future. Maybe more than 3 months down the line is where you will plot the money. Now, if you plot this amount, or if you plot this chart at the beginning of the month, you will know how much of money you are going to have access to the money in the month. And this you plot against what is the expenses which are there going to be during the month. And that will give you a clear picture of how the cash is going to flow in and how the cash is going to flow out of your system. You don't need to prepare a complicated cash flow statement. This itself will solve that problem. Now here, I would like to suggest one thing which is something which is create your own financial dashboard. Now, financial dashboard can be as simple as an Excel sheet, If you're not monitoring your business on a regular basis on these critical parameters, including the cash flow statement, one-pager cash flow statement, which I gave you, you will always have this issue of cash flow and working capital all the time. The first thing which you need to monitor, now you can prepare this dashboard based on your business requirements and monitor it either on a daily basis or a weekly basis or a monthly basis or a quarterly basis or a yearly basis. My suggestion to you is daily may be too difficult because you are busy with your business. Monthly will be too late. Ideal would be weekly. So you have sales targets versus actual every week. Like for example, today is Sunday. Either you take a review or you prepare this dashboard on a Saturday afternoon when you close your week business, or you prepare it on the beginning of the month on Monday morning, first thing in the morning. Sales target versus actual should be one parameter which should be there on the dashboard. Collections target versus actual should be the next. Now I know umpteen number of business owners who have sales targets, but I rarely come across people as business owners who have collection targets. They assume इतना सेल किया है 30% 30 days का क्रेडिट है इतने दिन में पैसा आ जाएगा, but they don't chase it whether the money has come on time the way they chase sales. If sales doesn't happen, they get sleepless nights, but they don't have a collection target. You should have a collection target and monitor it on a weekly basis. Cash balances is what you maintain and you monitor, which is cash balances in hand and the bank balances which is in the bank. DSO is days of sales outstanding. Now this is a terminology which many of you are aware of. If you're not aware of, you can Google it and you will see. This is the amount of number of days sale which is outstanding in your market. You may be under impression that you are giving a 30-day credit to your creditor, to your debtors. What is actually happening here is if you calculate this DSO, it will be anywhere between 45 days to 60 days. So your credit period that you are giving to the market is not 30 days, it is much beyond that. And because that awareness is not there, you keep on struggling with cash flows all the time. You should track your current ratio also, which is current assets divided by current liabilities. And you should have quick ratio, which is your liquid assets divided by current liabilities. Now, my humble request to you here is ask your accountant to provide to you these details on a daily basis or a weekly basis. If you have one takeaway from this session, this should be the one along with the cash flow statement, which I mentioned last slide. Prepare this functional, simple, Excel-based financial dashboard and start monitoring your business. You will never go wrong with your cash flow. And now I'm going to share with you next to the cash flow statement, the cash flow system, a bank management system which you can implement in your business. How many of you have one current account? Most of you will have one current account. How many of you have two current accounts? I know few businesses which have two current accounts. How many of you have three or more current accounts? I rarely come across a business which has more than two current accounts. What I'm going to suggest to you now is something very different. You should have two current accounts to begin with. First is incoming income account, which should be the first current account. And the second is outgoing expenses account, which should be your second current account. Now you talk to your bankers, they will be able to give you a bifurcation of your current account. They can give you sub accounts also under your current accounts. So you can create a one sub account, which is your income account, one going expenses account. In your income account, the only incoming money of sales will come. There will be no payment made and no checks will be issued from your incoming current account. And from your outgoing account, there will be no incoming which will happen from sales. It will only be payments made and expenses and checks issued. Now you may say, sir, इससे क्या फर्क पड़ता है whether it is in the same place or whether it is in the other place? It makes a huge psychological difference. If there is no money in the outgoing expense account, because you have to transfer this money from your incoming expense account, you will automatically get control over your expenses and you will not make unnecessarily expenses. When everything is in one place, you see there is money lying in the bank, you tend to incur some expenses. But when you have to even make that effort of clicking that one click and transfer money from your incoming account to an expense account and then pay the vendors, then pay salaries, then pay something else, it will automatically curb your expenses. Believe me, it is something which is psychologically very, very effective. The next thing that you do here is you create the third account, which is your GST account. You have made a sale of 100 rupees. You have collected money of 118 rupees. The moment 118 rupees come in, 18 rupees goes into this account and 100 rupees remain in the income account. A lot of people struggle before 20th to pay even GST because everything is in one place. They don't know how much of money has been collected on behalf of GST, how many of money has been actually income, how many of his expenses, how many it is to be still to be paid in this week, and then the date of GST comes in and you struggle to pay GST on time. If you have this, take the GST, put it into the separate account. 20th से पहले आपको वो पैसा वहां से लेना है और पे करना है. You have to do nothing else. And one more is the fourth current account, which is your income tax account. Whatever is your income tax as a proportion of your total turnover, 40% may be the tax rate, but the income tax that you will pay after taking all the benefits of all the deductions, maybe 22%, maybe 27% of your top line. Take that amount from that 100 rupees which you have kept in the income account, transfer that into your income tax account. So that once in a quarter when you have to pay advance tax, you will not face the same problem that you face with paying GST on time. You will be able to pay your advance tax on time without anything. And the most important part, you have the fifth current account or fifth account, I would say, which is a profit fixed deposit or profit account. Take 10% of the revenue. So 100 rupees का आपको income आया, 118 में से 18 rupees GST account में चला गया. Income tax का जो 20% 22% है वो आपका income tax account में चला गया because that anyway you are liable to pay whether you like it or not. बाकी जो बचा है उसमें से 10 रुपया आप इस अकाउंट में डाल दो, प्रॉफिट अकाउंट. बिकॉज अगर 10 रुपए का भी प्रॉफिट आप नहीं कर रहे हो तो आप बिजनेस नहीं कर रहे हो. यू आर जस्ट वेस्टिंग योर टाइम. Put 10% of revenue into this account. Now you may access this either monthly basis, quarterly basis, end of the year. That is up to you. But do this. Because then and then only you will get the benefit of running a business on your own as a business owner. You will see some profit at the end of the year. Rather than seeing profit on paper and nothing in the bank. Here you will have 10% in the bank at least. And one more thing, which is your stakeholders fixed deposit. If possible, now this is optional, the last one is optional. If possible, take out 5% of that 100 rupees, anywhere between 5 to 10%, not more, and put it into a shareholders account, stakeholders account. Now, profit is something which you are taking out, because I know a lot of people don't take regular salaries as owners, is a reward for the effort and the time that you spend to run the business throughout the month, throughout the year. Stakeholder deposit is something which is you are liable to get some return from the investment that you have made in your business at the end of the year. Let it be as low as 5%, 7%, 10%. Keep this account separately. Again, I'm saying the last one is optional. If you manage this, now you may not be able to do this all at a time. Not an issue. Start with the two. Income and expenses start करो. 2-3 महीने बाद जीएसटी अकाउंट खोलो, उसके 2-3 महीने बाद इनकम टैक्स अकाउंट खोलो, उसके 2-3 महीने बाद प्रॉफिट अकाउंट खोलो, उसके 2-3 महीने बाद स्टेक होल्डर्स अकाउंट, and start following this system. End of the year, within a year's time, you will have absolute control over your finances. That's a guarantee. And you will not feel the pinch. क्या ये सब डिस्ट्रीब्यूट किया तो वर्किंग कैपिटल कहाँ पे होगा? सब कुछ होगा. Believe me. Now with this, we are 54 minutes into my start of the lecture. I have exceeded the limit by about 5-10 minutes. I will just share with you that I conduct a workshop, which is Finance for Entrepreneurs, which is an offline workshop every month, which I just kind of casually mentioned at the beginning of the session. But this is just for your information. So if you have any friends you would like to know more about finance, who are based in Pune, you can actually refer them to this workshop. This is happening on next Saturday, coming Saturday on 19th of October. It's a full day workshop. I will just like to share with you how the workshop looks like.
There's no sound. There's no sound, sir. We are not able to hear anything.
I'm sorry, you are not able to hear anything. Okay, then I'll skip that. So with this, I come to the end of the session and we are ready to take any questions that we may have.
Yes, participants, you may please unmute and ask your questions. And before that, I'd like to thank Mr. Suhas for taking your time out on a Sunday morning and giving you a good session today. Participants, please unmute and ask your questions, please.
Good morning. This is Mohan.
Yeah,
Can
Mohan.
you throw
Yeah,
some
Mohanji.
light on? Can you throw some light on new age financing, sir?
Can you throw some light on?
New age financing.
Sir, the best is the old age financing, which is there. New age financing is something which is generally talk in the air. So to be honest, I don't even understand the terminology new age financing. So if you can give me some hint, maybe I'll be able to elaborate on that.
Right.
My question is, you said working capital will be automatically taken care of. Can you just highlight a bit? I mean, give more clarity.
I understand, sir. Thank you for asking me that question. What are the three biggest challenges that any entrepreneur face? First is collections.
Collection, yes.
Second is cash flows.
Cash flow.
Third is working capital.
Correct.
I have tried to address, besides giving you clarity on the profit and loss statement and the importance of balance sheet, I have taken these three topics today at a very, very brief level. I spent something on collections. I spent some amount of time on the cash flows, and I spent some amount of time on the banking management system. Now, the question here is working capital is something which you keep on requiring on a regular basis. Correct?
Yes.
Now, the reason we face this difficulty with working capital is because we don't understand how the cash flow works in our business. And we also struggle because we are not focused on collections. Everything is interrelated.
Okay.
When I'm saying is if you implement this banking management system, you will not face a working capital issue, is because what happens here is you have a mistaken view that 118 rupees mere system mein aaya, and because it is everywhere, everything is there in one account only, you have this mental impression is 118 rupees is what is accessible to me to run my business.
Correct.
Which is not the case. Out of that 18 rupees does not belong to you. It goes to the government. But you are not having that impression. You are having that impression that 18 rupees is also available to you run your business, which is completely wrong.
Correct.
So I tell you, take away that 18 rupees.
Yes.
100 rupees bacha. I am now telling you that advance tax, whether you pay quarterly or you pay with penalty at the end of the year, choice is yours. You still have to pay. There is no choice.
Correct.
So instead of paying penalties and these heavy, the thing is you have to pay that income tax. So instead of paying your penalties and levies and all, you take that income tax and you keep it separately, because anyway that money also doesn't belong to you. It may belong to you for a month or so.
So you're asking me to take away 30 rupees and just leave the 70 only to run the business. Because 10% you're asking me to take away.
Yes, because anyway you have to take away.
Correct.
It is not your money at all. You are under a misconception that is the money which belongs to you. And what you do, you spend that money in working capital. Come 20th of the month, you scramble yourself how to pay GST.
Correct.
You come every, for example, every June end and your September end and your December end, you basically keep on struggling because you have to pay advance tax because you have not kept provision for that separate. I am telling you, you keep because that money doesn't belong to you. The money which belongs to you will be the rest of the money. You do business from that. But there is one more thing which I shared with you. Now you may say, sir, अगर 70 rupees बचा, तो 70 rupees में मैं धंधा कैसे करूँगा?
Correct.
The thing is, you are anyway doing that business with 70 rupees. The only thing is you are doing haphazardly. Because when you are already paying your GST, when you are already paying your income tax, you are already paying your advance tax, you are anyway doing that business with whatever remains. The problem is because you are not taking out in front, you are feeling you have access, you are having more money to play with, which is not correct. All I'm saying is be aware that this is the amount of money you have to play with. This is the money you are available with you and do business accordingly. And if you run short of working capital, which you will feel now, because till yesterday, till before I said this, you were doing business with 100 rupees. Now I'm saying do it with 70 rupees. You will say, sir, 30 rupees मेरा cash flow, आपने working capital अभी निकाल लिया, मैं धंधा कैसे करूँगा? I will bring your attention to whether you should make your company debt free. You do business with other people's money. 30 rupees आपको कम पड़ रहा है, borrow from outside. Don't put in your money. You will be profitable still. Have a CC account, have a cash credit facility, have a bank overdraft, or have a loan, whatever it is. Because loan भी आपको 10% पे मिलेगा, you should be doing business at least at 30% profitably. Example which I shared with you. Stop doing business with your own money. Start doing business with other people. Now, I'm not saying go and borrow recklessly. Borrow whichever way your business can sustain. But here we do ulta. We take tension की लोन लूंगा, इंटरेस्ट पे करना पड़ेगा, बैंक को रिस्पॉन्सिबल होना पड़ेगा, बाहर के लोग सवाल पूछेंगे, they ask lot of documents and blah blah. Let me put in my money. Owner's money is the most expensive money in the business. Hope I've answered your question to some extent.
Thank you, sir. Excellent. Thank you.
Sir, I have a question for you about
Yeah,
working
Indrajit.
capital again. You see, there are companies which have a long gestation period, custom purpose-built equipment, etc. Where the time from the order to the delivery could be anything between 2.5 to 4 months.
Correct.
And then the customer demands a credit period also, maybe
Of 30 days
or 60 days.
Correct.
And there is an advance taken, but that could be very low at about 10 to 15%.
That's true.
So then what does one do to ensure that, because it's not one business, one machine that you're making, right? You're probably trying to get at least 10, 15 orders.
Correct. So this is an excellent question. This is the struggle which I was talking about, the working capital struggle and the cash flow struggle. Because you bought the machinery on day 1, you bought the raw material on day 15, you prepared the something on day, you prepared the end product on day 30, you sold that end product on day 45, and then your customer is demanding a 30-day, 60-day, but as you say, you are actually having a gestation period of 2.5 months, and उसके बाद वो 60 days की credit मांगता है. So from the
Even
day
more.
you, even more.
So there
So
could
from,
be
let
there's
us
a
say,
cash gap period.
now how to take care of that cash gap? The first thing is you need to be aware of what is that cash gap. You have that impression here that you are giving only 30-day, 60-day credit, but you are not taking into account the time to be taken from the raw material purchase to the end product sold, not produced, sold time. Now that gap is 2.5 months. 2.5 months आपका salary रुकने वाला नहीं है, आपका rent रुकने वाला नहीं है, आपके बाकी expenses रुकने वाले नहीं है, आपके electricity bill रुकने वाला नहीं है, आपके petrol और fuel रुकने वाला नहीं है. So now my question here is, if you are at the beginning of a new business, you keep aside this much of amount of money as a reserve to sustain yourself for that 2.5 months. Point number 2, if you don't have that, you are already into a running business now and you are facing this issue. You have 2 choices. Either you put in your own money more, which I would not advise because that is more expensive way of running a business, or you go and take a cash credit or you have an inventory and you have your finished products, you take a cash credit facility, or you take a bank overdraft against your assets, or you take a loan also. But the only caution is, and that is where people again go wrong, is whenever they get access to bank overdraft or cash credit facility, they think that boss, मेरा प्रॉब्लम सिर्फ ये 2-2.5 महीने का कैश फ्लो का प्रॉब्लम है, जिससे एक्स अमाउंट ऑफ मनी. इफ आई गेट दैट amount of money from somewhere, either as a borrowing or as a capital or as a loan or as something else, I will not make the same mistake again. वो जैसे ही पैसा मेरा आएगा, मैं ये कैश क्रेडिट बंद कर दूंगा. I will close this facility. The problem here is you take a bank overdraft for 10 lakhs, you use it for 2.5 lakhs, and over a period of time, instead of closing that, end of the day, 6 months down the line, you have used the entire 10 lakhs. Because you have now got access to easy money. So instead of controlling your expenses, now you actually go and give even more credit, or actually your extended period of working flow is even more extended. Because of that lack of awareness, what I call DSO, days of sales outstanding, or because you don't prepare your cash flow statement. So Indraliji, a small request, pay your accountant, chartered accountant, some few thousand rupees more per month, or maybe your chartered accountant more in fees. And tell them, if you're using Tally or any other software for your accounting purposes, tell them you want a cash flow statement to be prepared every month.
Right.
It is very easy. It is system generated. The accountant doesn't take, accountant शायद maybe आपका accountant इतना ज्ञानी नहीं होगा, आपके chartered accountant auditor से बात कर लो. Tell them you want a cash flow statement for the next 90 days, not for 1 month. For next 90 days to be prepared. You have that cash flow statement in front of you. You will exactly know, as I said, that one page monthly planner, you will exactly know how much money is going to be available to you during the month and how much of money is not going to be available.
Right.
And how to then get control of the situation. Hope I have answered those questions. It is too broad a topic, but I'm just trying to
I got a gist. Yes, thank you so much.
Thank you, sir.
So can I ask a question?
Yeah, Mr. Pratap, somebody has put in your hand. Mr. Pratap, I can see.
I'm Vishwanath.
Yeah, Vishwanath.
Yeah. So a couple of things. Excellent thing. Very, very relevant. Two things. One is you said you can open many accounts in the same bank. They allow like that? I mean, because this is the first time.
This is a secret which I'm actually telling you. Most of the banks allow that.
Okay.
But they will not give you that till the time you ask for that.
Okay.
You have to ask for that.
Yeah, because you can't. You know, they don't allow you to open in another bank if you have a.
Exactly. Yeah. I was coming to that. Now you say, boss, we are not allowed. The government has restricted us. You can have only one account. So what I'm saying is, you will have one current account. You will have sub accounts, which can be managed separately.
My second thing is, you said you should always use borrowed money. You know, for all small entrepreneurs, the real pain is actually we become real estate, because if you see a big project, 5,000 crore project, they may invest 500 crores in land, 100 acres or 150 acres. A small company, 50 lakhs investment, you still need 1 acre or 2 acres, which will be 2 crores, 3 crores. So whether you like it or not, nobody lends you money to buy land. You have to put your money. And what happens is because I am been an entrepreneur for 30 years, at the end of the day, after seeing all the cash flow and the struggle, the paying the labor, the tax, the electricity bill, everything, interest to bank, what really remains with us is actually real estate. It has appreciated so much, which actually is stupid. We are here to do business, not do real estate. But most small scale people are pushed to be doing, we become real estate people, because our land which we purchased 30 years, the cities have grown, and suddenly you are sitting on 100 times the wealth, which never reflects in your balance sheet also.
Yeah, because that is at the book value, not at the market value.
Yeah. So actually, this is the scenario in this country. Whatever the government says, it doesn't help small entrepreneurs with the place of business, which is a dead asset, which is actually no use. In that money, if I can buy more machinery, more production, Actually, it is better. But I don't see where, and these people, the people who lend also, they again and again want land with all the government approvals and building in it, which they take it as collateral. So
Correct.
every entrepreneur, small entrepreneur, MSME, actually is does real estate, actually not business. Business is a side activity. The real activity is real estate. After 30 years, you see what you have in hand, is the land. It's a sad state of affairs, but that is how we put our money. Nobody will give money for buying land.
That is because at the initial stage, when you started business, nobody will lend you money, obviously.
Yeah.
But answering this question would be the slide which I showed you, whether it is business to sell or whether it is business forever. So at the beginning, when you start a new business, you first of all decide whether this is a business which you are going to build it up to a certain level and then sell after some time, or you are going to run the business forever. If you are going to run the business to sell, then your real estate, which has increased in value by 100 times, is also going to fetch that value, because when you sell, it will be, the land cost will be at market value and not the book. Number one. But if it is a business which you are running to continue forever, then the question here is, you run the business with borrowed money as far as possible. Now, in the initial stage, difficult hai, but aaj ke tarikh mein, when you are 30 years old into the system, you just have a look at your balance sheet and then you see whether what is your capital, what is your current asset, anyway, the question here is, use other people's money to do business.
I just want to interrupt here. The problem is, most of us don't take this asset in our costing. See, I have talked to many entrepreneurs. I said, do you add the value of your land and building to your product? They say, if we add it, we cannot even sell one product, because it has become so much over a period of time that actually we are being stupid holding valuable asset because of other things. Like, if you want to shift now, you have to go 100 kilometers from your home place, especially in a place like Chennai, to find affordable land. So you are sitting on a land bank. If you add that value, actually we are making a loss. We are doing we are actually, as you said, we are not doing profit. We are paying salary, we are earning goodwill, we are having prestige in the society, but really not making profit.
You feel you are the owner of the business, but you are not the owner. You are actually working for others, which is your employees. You are working for your vendor. You are working for your customers. You are working for your employees.
Yes.
And you are not working for yourself.
Yes, because we are not monetizing the land and building asset.
Correct.
This is a problem.
Yeah. Because, thank you so much. Sir.
Yeah, I'm because this is my
That's true.
Pratap.
Yes, sir. Yes, sir. I will go ahead.
Can you just switch on your video, please? So that
Sorry,
I know
sir.
whom I'm talking to. Can you switch on your video?
Okay, fine, sir.
Hello,
sir. Yes.
Thank you. Hello.
Sir, it was a very nice presentation. I thought I could never understand finance, because once I attended a class, they started with credit debit, and that's the end of it. I never looked into it again.
It goes over your head. Yeah.
It went over my head. But what you taught today in a very simplistic and concise way was really, it was easy for me to understand. And now I can look at my financial statements, bank P&L, and balance sheet easily, and I can understand things better. So I will come to my question part. So I run a very small company. It is a bootstrap company. So we started with initially a small amount, and whatever revenues we are making, we were continuously reinvesting and growing that company.
Yeah.
So that is how it has been. And we don't have any, payables to our vendors, because we almost buy everything in advance. We plan it for like a quarter or 6 months, our raw material. So we buy it whenever the cost is low, or whenever we can take advantage of the situation and all that. So we have that raw materials and everything in place, and we sell it. So when it comes to scale up, so now between me and my co-founder, the issue is, should we go for a venture capitalist, or should we go for a loan? So taking a bank loans or something, because scaling up needs some external
Need
funding.
extra capital. Yeah.
Yes, sir. So, and we don't need any machineries or anything because ours is a handcrafted products. So that is not a problem for us. So we can hire as many number of people as we want, and we will pay them immediately. So I'm in like a B2C. So mostly I receive the payment immediately. So so the credit comes. The chart you show, cash flow planner, was also really important as we are planning to expand in retail outlets also, which means they are going to demand credit from us going forward henceforth. So till date, we never had a problem of cash flow, frankly speaking, as it is, we receive the payment and supply the material. And so we have these two things thinking about way forward. Coming to the cash flow thing, should we take like a venture capitalist money or should we go for a loan, sir? Which one would you advise?
Great. So I'll again, some of you have asked whether the presentation can be shared. Gopiji. So to those of you who are still here, I have no hesitation in sharing the presentation. But only request is don't circulate it and make it viral because some of the components are trademarked and they are proprietary ownership. I mean, there is some IP which is involved in it. So till the time you use it for your own benefit, to refresh your memories, to learn the whole thing again, I don't mind, Gopiji, I will share the presentation with you, absolutely no issues at all. But don't try to share it outside because they will not even understand what we have talked about. You have invested your 1.5 hours with me to understand what I'm saying. An unknown person just looking at the presentation is not going to understand. So, Pratapji, answering your question is, I will bring your notice to that 2 slides which I mentioned again. Whether you are building a business to sell or whether you are building a business to do it forever.
So we are building it to run forever. So
if you are running it to business to run forever, the simple answer here is don't go to a venture capitalist, take loans. That was what the message was all about. Because you want to keep the ownership with you forever, then do the business with other people's money.
Right.
And don't be bothered that borrowing money is going to cost you more. No, actually you should be making more profits than the cost of borrowing.
Right.
So if you structure it well, sitting with your accountant and chartered accountant and make a kind of a business plan or maybe a project report or something like that, as if you are starting a business again, though you are a running business, it will give you a clarity that yes, borrowing money to the extent that you can borrow, of course, will help you in taking care of this small funding issue.
Right, sir. Right, sir.
Yeah, thank you. Mr. Selva Ganpati has also put in his hand, so I would like to answer him.
Hello, sir.
Hello.
Good morning, sir. This is Selva.
Good morning. If you can switch on your video, please.
Sure.
Thank you, sir.
Hello, sir. Good morning, sir. Actually, sir, thanks for your direct inputs to MSME companies and all business owners. Sir, actually here 2 points are there. Actually, that cash flow, any sample like cash flow, how it can be connected to our requirements, how you actually like that you have taken. Similarly, cash flow also some samples format which you believe that is good, it's successful model, something like that, sir.
So answering your question here is, so are you asking me that which is the most optimum format of cash flow that should be looked at?
With some samples, sir. That is the one point, sir. Second point, actually, that you said it is for there are 2 types of business, A and B. Sir, actually, like I understand your point, but if you take that, whatever the expenses, like the interest expense for the capital owners' money, that you are not accounted, sir. Maybe that you are taking as the dividend at the end. Maybe because of.
Do you take interest for your own capital? Yeah. The question here is, do you take interest for your own capital?
Yeah. That actually you. I don't know about others, sir, but I will try to estimate whether whatever I'm putting money, whether I'm getting that at least if I lent it out outside, whether will I get that interest. In that way, I need to match it. That amount is not captured in section in B. That is what that maybe per share capital might increase. That other point, yes, you maybe that pre-tax, post-tax. There, I think some differentiate can come, but I'm not clear understanding, sir. The third point is whether the dividend is it taxable per business owners or is it tax-free amount? Because I'm
this something. Okay. So your first question was the cash flow format which is to be used, correct?
Yes.
Now, if you are using any, if you're using any accounting software per se like Tally, it has an inbuilt cash flow statement generator.
Okay.
So you can generate a cash flow statement based on whatever data you have input from that same Tally account or Tally software or any other software that you were using. So it is easy. The only thing is you'll have to instruct your accountant to give it to you, and then you can have a look at it.
Understood, sir. Understood.
But as I mentioned, for your better benefit, generate a cash flow statement for 3 months, 90 days period going forward as a rolling forecast,
Okay.
rather than only for a month. Because that will give you a better clarity in terms of how the cash is going to flow for the next 2 months. Number one. Number two is the second question was?
So cash flow, is it about that A or B? If it is maybe interest when we are loan now.
The interest, correct. That's a great question. There is a concept called cost of owner's capital, which I have not taken because that itself is about a couple of hours. What is the cost of the owner's capital that the owner is putting into his business? Now, you mentioned that you take out that interest equivalent to what is the interest charged by an outsider if you take a loan.
Yes. Sir,
Am I correct?
Yes, sir. If it is 16% in OD, if I make it,
Correct.
if I want 12%, then it seems to be that capital owners will be better. That is my personal views. Anyway, that you can put your view.
No, the question here is that you may feel that your cost of capital, even if somebody is charging you 16%, outsiders are charging you 16% if you borrow money, and you are introducing your own capital, and you take 12% interest, that is more than enough. You don't want to actually take 16% equivalent to outsider. That 12% cost of your own capital is very, 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 very low. It has to be much more than 16%. The question here is most of the people are not even aware of how much cost of capital they should be taking out or how much capital they should employ, knowing that this is going to be cost of capital. So if you're the minimum, I would say, and see whether it is still sustaining it should be at least 16% which others are charging. And then recalculate the whole business. If it is not, then it means if the business is not able to sustain 16% of the outsider's money, then you should not be even putting your money and unnecessary. And you have to make the business according. You have to tweak your business plan. And the third question was regarding
the dividend. Is it taxable to owners?
Now the question here is, dividend is paid after tax from the company's perspective. But when it comes to you as an individual, it comes to you as income from other sources. So at a personal level, again, it becomes taxable because it is income from other sources. As an individual, ओनर ने तो मतलब बिजनेस ने तो टैक्स पे करके दिया और उसके बाद आपको डिविडेंड.
Understood.
Yeah.
Thank you so much.
Thank you so much. Now I have a lot of messages which are there in the chat box. So we know P&L is not at the end of the year, but by September of next year. Now that is where we make a mistake. We prepare a P&L only once a year. My humble request and a suggestion: prepare a P&L every month. If not balance sheet every month. Prepare a P&L every month, prepare a balance sheet every quarter. I would go one step, prepare both every month, but वो आपके लिए बहुत ज़्यादा हो जाएगा. If there is one takeaway from this session, let it be one P&L every month, balance sheet every quarter, not only once a year. You do this, and you'll feel the difference between your business, what is it today, and what is it going to be 1 year ago. What is the sixth component in a balance sheet? Arun Ramaswamy asked. The sixth component of the balance sheet, which was not mentioned in the first instance, was reserves and surpluses. Reserves and surpluses I didn't mention because it is not applicable to a lot of companies. When you have a private limited company, then that is something which is mentioned separately. Otherwise, it gets added to your capital, which is why I didn't mention it separately. How do we differentiate between income and asset? Both are coming in. Sir, अगर आपको income and asset are two different things. When, as I said, money coming in is either income or liability. So you are again confusing between the two. I'm going to share with you the presentation. Look at that slide where what top pay P&L दिखाया है, where how the money is coming in, and नीचे पे balance sheet बताया है how the money is coming in. Just take out a printout, frame it, and put it in your desk or wherever you can see it on a daily basis. If you can understand this one sheet, you have got everything which I am trying to teach you in this session. Money coming in, money going out, how to differentiate and how to label them. Next is expenses converted to buying assets. How are they accounted? When your capital is spent to buy an asset, it gets reflected into your balance sheet automatically. You don't have to account it separately. Expenses are something which get captured into your P&L. So you're confusing again between the two. One is getting captured in P&L, one is getting captured in balance sheet. Both are not there in the same place, Mr. Bandar Joshi. Then BBB. That was the answer to the question. Amit Mishra, direct message. I don't need to pay dividend or share reserve more reserve with shareholder of equity. Okay. I don't need to pay dividend or share. We provide services for individual and businesses in UAE. Assistance in opening a company in the UAE for any type of business. He's asking me to help him in UAE, which I'm not in a position to do that now. He is actually promoting his own services, which is okay. Solomon Sanjeev, very good talk. Thank you, sir. I'm based in Hyderabad, retired army officer, currently state convener for education in Telangana. Mostly into education. I also have a company doing STEM and robotic education in schools. Okay, looking forward to reach Tamil Nadu and improve cash flow for my company. Thank you so much, sir. Babu Gopinath, super sir. Pratapi, this is nice. Very good idea to have multiple accounts. Thank you. Excellent and simple education of business finance. Mayuri K. Thank you. Excellent and very insightful session. Ramakrishna Kashirkar. Thank you so much. Amit Mishra, very good session. Thanks. Ravi Mirji, Namaskar at Business Financier. Please share registration link for Pune session on 19th. It's an offline session, sir. I will just take a note. Gopiji, if you can share me the number of Ravi Mirji, I will share that link with him. If you have somebody in Pune.
Yes, sir.
I got
Mohan
one
P.
quick question. This is Raj Sundar, sir. Actually, a very good presentation. Enjoyed it, and a lot of good, excellent tips we got, and useful for small and medium-sized businesses as well. I just want to have one clarification, and maybe a doubt.
Yeah.
So, how can we do the budgeting and this? Then how to connect the budget on annual budget or 3-yearly budget with this expense statement? So, are we on right track or something? So, how to do the budgeting with this kind of financial statement?
I understand, sir. So my suggestion to you, first of all, so are you saying that while you want to get hang of budgeting because you are facing difficulty with cash flows and expenses going out of hand and managing the working capital and stuff like that, if I'm not wrong?
Yeah. So like before, for the year, say 2024-25, so I want to plan my, budget. So how to connect these two things? Am I on right track or on a wrong track or something like that?
Sir, do you prepare a budget for your business at the beginning of the year?
Yeah.
You do. Then do you do a monthly exercise of how is it budget versus actual every month?
That is the thing. So what kind of philosophy or thing I can adopt? Like there are some of the tips. Example, you said no, sir. I can borrow the money, which is more, and so something like that. So in terms of OPEX.
So to make it a little simpler, we are in the month of October now. Only 5 months of this current financial year are left. My suggestion to you would be that you have prepared a budget, but you are not, monitoring whether the things are working as per budget or not, which is where this gap is coming in. So to begin with, start creating your cash flow statement for the next 3 months, which I have repeatedly said can be generated from your current accounting system, or your accountant or your chartered accountant can help you with this. So your cash flow statement for next 3 months will become kind of a budget for the next 3 months. where the money is going to come from, where the money is going to go out, and what is the money which is going to remain in the system. Once you get a little hang of it, then the first step is cash flow statement to be generated from the system, which is for a period of next 3 months, not cash flow for 30 days, cash flow for 90 days. The next step would be prepare a P&L for every month. So maybe not end of October, but end of November, you should prepare a P&L for month of November. That is step number 2. Step number 3 will be prepare a balance sheet on 31st of December and then on 31st of March. If you do these 3 steps, then when you come to 1st of April 2025, you will have a budget which will be much more realistic than what you prepared right now. And by that time, since you will be in the habit of 3 habits you will form: monthly P&L, monthly cash flow statement for next 30 days, 90 days, and a quarterly balance sheet. You will have total control over your budget and you will not face this difficulty which you are facing.
Thank you, sir. Thank you so much.
Thank you so much.
Any software is there for that?
Do you use any accounting software for your regular accounting? Like
Simple,
Tally or something like that?
no, just simple. Auditor is working on that. I'm not sure about it, but anyway, any recommendation?
You can make a note and find out what is the accounting software he is using. If it is anything similar to Tally or normal accounting software, you tell him that you generate a cash flow statement from me because it is inbuilt. You can generate it easily. You don't have to buy any other software for that. So just make a note of what kind of software is being used by your accountant.
Okay, sir.
Right, sir? Thank you so much.
Thank you so much.
Thank you. Thanks a lot. Informative session. Thank you, Suhas, sir. And Mr.
Sir, Padmaraj here, sir. Thank you very much.
Yeah, Padmaraj. Padmaraj ji, boliye.
Really great, sir. Two questions, sir. I put it in chat also. I am in a small and medium kind of business. So would like to understand, you mentioned a point, owner's money will cost more than the borrowing money like this.
Correct.
So can you please explain more? Because still I am not convinced, because owner money is interest-free money, whereas borrowing money is we have to pay the interest. Can you please, that is one point. Second is you told about your sessions. Is there any online session which we can attend, sir?
Unfortunately, I don't have the online version right now, but as I'm making these talks, I'm getting a lot of requests for online session also. So the moment I launch an online session, which will be for one day, I'll definitely get in touch with Gopi sir. And right now it is only in-person session which I do in Pune.
Okay, sir. Thank you.
So answering your question, where your own money is interest-free money, that is the biggest misconception you have about your business and your money, sir. Now, what is the cost of your capital which you are putting in? Is there no cost of capital? मतलब ये आपने पूरी जिंदगी की मेहनत करके कमाया हुआ पैसा है जो आप अपने बिजनेस में डाल रहे हैं. You are putting it into your business. There is no cost attached. It's a free money. You have got it free. You have inherited without working. No, na. You have worked your butts off to accumulate that money over a period of time, which you are now putting into the business. How can it be a free money? You tell me. It cannot be free money. Owner's money is not free. ये पहले दिमाग से निकाल लो. If I do a session, it will take me minimum 2 hours to do a session on cost of capital of owners. And if I, in the end of the day, I will prove it to you that the cost of capital which you are putting in your business is at least 50% not free. It is not even 16% that you are paying to the order, that you pay to interest to the outsiders. It is 50% is the cost of capital which is you are putting into your business. Now let this be a shocker for you to just think about it. But I can prove it to you. So never be under impression that your money is free or you have to put in money without expecting anything. No. Now I will leave it at that because this is not in a position. I'm not in a position to do this in 5 minutes also. But your money is not free. As the gentleman said, you have to earn at least as much as what the banks are. If you borrow money from outside, if they are charging you 16%, your money should earn at least 16%. If it is not earning 16%, if you do your calculations, then you are not running a profitable business. You should relook at your business totally.
Oh, okay. Understood, sir. Not understood. At least I try to felt this thing. But the point here is, if I am not using my own money, I will be putting in bank deposits or some mutual fund or something like that, which is going to earn only average 10 to 12% only. Whereas if I take loan, it will be, as you told, 16%. I'm not sure. So where I will be paying more, no?
Sir, the question is, what is the profit margin with which you are working right now in your business?
I am doing it's basically a service business. It's supposed to be more than 30%. Suppose
more than 30%.
Yes.
So you are doing a business which is earning more than 30% profitability. Then why are you bothered about 16% of loan? Number one. Number two is, where are you getting this idea that if you put money from your bank deposits and your mutual fund, then 12% and all that, where is that coming from? What you are saying is mutual fund is earning me 12% and I have to pay loan of 16%, is what you are trying to say.
Yes, yes.
If you put it in mutual fund, it is earning 12%. But the question here is, if you put it in business, how much are you earning? You are earning 30%, right?
Yes.
Then why are you bothered about 16%? Your money is not free. Your money is not free. It should earn 30% at least. If it is already earning 30%, you should not be bothered.
So then you are suggesting me, if I am confident to earn 30% profit in my business, better to put my own money rather than borrowing.
It is the other way around, sir. You borrow at 16% and then earn 30% out of that.
Okay. What
Because
I
if
will
you
do
are
with
putting,
my own
because
money,
if
sir?
you are putting your own money, you are earning 30% and you're putting money which is earning 30% only, and your cost of money is also 30%. So net you are zero.
Oh, okay.
I hope I got the point across, though it's a little complicated to understand. The question here is, your cost of money is much higher than what you anticipate. It is the most expensive kind of capital. Most expensive money in the world is your own money, owner's money, I would say. Now again, this is a little difficult.
The hurdle rate needs to be worked out.
Sorry?
For each business, the hurdle rate, what is the internal cost of?
Sir, don't confuse
Capital,
the hurdle rate with the hurdle rate which comes from PMS and the venture capital and all. Don't use all these high fund jargon. It's of no use in your business. हम लोग छोटा मोटा बिजनेस कर रहे हैं, हम सिंपल चीज समझते हैं. प्रॉफिट मार्जिन मेरा क्या है, रिटर्न ऑन इक्विटी मेरा क्या है, और अगर मैं बाहर से लोन लेता हूं तो मुझे बैंक इंटरेस्ट क्या देना पड़ेगा. At no point of time, which all I'm trying to say here is, your bank, I showed you with example A and example B. He is borrowing money at 10%. Let us say you are borrowing it at 16%, not an issue. But you are doing business at 30% margin. It always makes sense to use other people's money for your business rather than putting your own money. So hurdle rate आप अपना calculate करोगे, मैं अपना आपका hurdle rate, which is cost of your own money, जो मैं अभी बात कर रहा था, if I take that session separately, it is going to be more than 50%. So I am saying, even if you make you are earning 30% on your 30% is the margin. The question is, return on equity is different. Margin is when you earn at one transaction. The capital, how much capital you turn around in a year is going to be your return on equity.
Correct.
Now your return on equity has to be more than 50% because that is your cost of money. So if you take loan, churn that money multiple times, and then earn much more, 30% every time, makes more sense rather than putting your own money. Is the point which I am making.
Very true, sir. Very true.
Yeah, thank you so much.
Thank you. Thank you, sir.
Dear sir, can we have the presentation or PDF of the presentation to keep revising, which is what was asked? I will do that with the request not to circulate it outside. Yeah. Thanks for the session. More informative, excellent, very useful. Thank you, sir. Gopi, please share the speaker's contact details. Okay, I will definitely.
I've already done, sir.
Yeah. Is any planned online session, which I just answered? I'm in the planning stage of that. This way there in the other side, reserves. Okay, that was the 6th component. Satish Seturaman, lovely presentation. Learned a lot today. Thank you, sir. Would love to have a copy of the presentation. I will share. Thanks a lot. Thanks a lot. In small, medium entrepreneurs, small businesses, how own money will cost more than borrowing money? I just answered that in detail. I will contact thanks for business finance session with specific topics of P&L, sales, cash flow. It was an excellent session covering most important aspect in very simple language. Thank you for the session. I have to leave now, but really appreciate it. Is there any workshop where guidance on starting small scale businesses? You would have some Chamber of Commerce in your Chennai, which will be having such sessions actually.
Yes, sir. Yes, sir. There is.
Yeah, there is.
Niyata, any question? Arvind Gopal. Niyata, Arvind Gopal, any questions from your side?
I think I have more or less
Done.
covered all the chats which are there. So once again, thank you so much. I mean, there are still a lot of people who are still there. So if you have any questions, I'll be more than happy.
Niyata, Arun.
Any workshop for young students? I do workshop for MBA second year students for those MBA colleges where there is some kind of DNA where those MBA students are more or less coming from a business background and they intend to either join their own family business or they want to start their own business, which is what even a lot of youngsters do nowadays. So if you have connects with good reputed colleges, MBA colleges, I can do a session for them.
So
Rajendra, would you like to add a few? Would you like to add a
can
few?
you give a small example again? Sorry to ask.
Yeah.
About owner's money will
Hello.
cost more. Any example can you give or
Hello.
any calculation?
Sir,
Hello.
that presentation and calculation itself is going to take me a lot of time because I have to start with basics and then I have to build it up. But enough to say is that your owner's money is not free. And number two is you feel it is free because you feel it is your responsibility to put your money into the business. But that money has an opportunity cost, if you understand the term, what is called an opportunity. If that money was not put into business, you would have put it somewhere else. You say mutual fund में डाला होता 12% मिलता था, FD में डाला होता था 6%, 7% मिलता था. But when you are putting, so let me give you a simple question. Here is, if you take a loan, they are charging you 16%.
Yes.
Correct?
Okay.
Now, when the person is giving a loan, is he taking any risk? No, they ask for a collateral, right? Now, a lender, a bank is giving a loan at 16% and still covering himself well with a secured loan at 16%. As an owner, you are lending money to your business. You are separate than your business. Remember that slide.
Yes, yes.
As an individual, you are lending money to your business. Now, is that a secure bill? Is that a secure lending? No. You don't know whether the money will come back, right?
Yeah, yeah.
So you are not backing it up with any asset from the business. So tell me, how much should you expect if it is an unsecured loan? At least double?
Yes.
So instead of 16%, your expectation from the amount of capital that you are investing should be 32% directly. See that, number one.
Yes.
Number two is now you are building, let us say, on the liability side, you have debtors whom you have to pay the money. Correct? Now you pay the money to them after, whether you pay the money on the date of invoice or you pay the money to them after 30 days. Do you pay more money to them after 30 days? No. You pay the same money, right? Hello.
Padmarajan.
He dropped out by mistake. Anyway, so your creditor, you pay the money on first day also, you pay the same amount on 30th day also. You enjoy that money for 30 days, right? Now, suppose I go to one of my creditor and I say, because I will give you the money right now on the day of the invoice. What is the cash discount you will give me? What do you think he will give me a cash discount of? Anywhere between 1 to 2%. Yes or no? If I take midway 1.5%, which means that 18% of the money, that capital which has been invested into the business, on the creditor side, I can still earn 18% out of that. Loan is anyway charging me 16%. So if I prepare and put it into a chart and explain to you that, boss, this component, this much is basically the weighted cost of this particular liability which is costing you. The capital, the reserves and surplus, the loans, and the current liabilities. How much is the proportion to the total? And I do a weighted average. I will guarantee you one thing, it will not be less than 50%. That is the cost of capital which you are incurring without even realizing. Now 50% is mind-blowing by any chance. Which is why I make a statement again and again, the cost of owner's capital is something which is beyond your comprehension. It is the most expensive money that is available to a business. Better to do. Now again, I'm not suggesting go out and take loans jitna milta hai and burden yourself, but do take help of other people's money to run your business instead of pumping in your money over.
Great, sir. Thank you very much, sir. Sir, now the point here, what I will do, okay, I understand the cost of owner's money is more than the borrowing. What I will do with my own money for any to grow better?
Sir, okay, that's a great question. कि मैं अपना पैसा अपने बिजनेस में नहीं डालूंगा तो क्या करूंगा उस पैसे का, right? That is your question.
Yes.
If I don't put my own money into my own business, what am I going to use that money for? That is your question, right?
Yes.
Why are you doing business in the first place, sir? Is it to pass time? Is it to give employment to other people? Is it to keep your vendors happy? Or is it going to serve the society? Or is it going something else?
It is for combination of all, sir. To serve the society based on my experience, and also to run a peaceful life with of course generate revenue. I mean generate profit.
Okay. Now let me ask you a simple question that you are not putting that money into your business, and now your question is what will do with that money?
Yes.
Suppose for a moment, suppose that money which is remaining with you right now and you have not put into business,
yes,
is so much that you can retire tomorrow. You can stop working tomorrow. What will happen? Will you ask me this question?
No, it is a mind-boggling, sir. To sitting at home idle, it's really tough.
No, I am not talking of sitting at home idle. My question was, if the money available to you allows you to financially retire tomorrow, will that money will be useful to you or not?
We don't know it is enough or not.
I am saying if it is enough, then let us say for a moment that the amount of money or retirement corpus that you require to retire peacefully, live retirement life peacefully is, let us say, 1 crore rupees.
Okay.
And tomorrow you are able to take out over a period of time that amount of money which is equal to 1 crore rupees. आपने शुरू में business में पैसा डाला.
Okay.
Over a period of time, you, instead of putting more and more money, you started doing business with other people's money, and you are able to take out your profit, and now you have a corpus of 1 crore lying with you. Your question was, what will I do with my own money instead of putting it into the business? My question here is, you build a retirement corpus for yourself.
Can you repeat? You build a plan?
You build a retirement corpus for yourself.
Okay.
So that tomorrow, whether you want to work or not, is a choice, not a compulsion.
Okay.
That is why you use your money for, not to put it into your business all the time. You take out money also periodically. आदमी सर्विस क्यों करता है सर? और पैसा इकट्ठा क्यों करता है? To live a retirement peaceful life after the tenure, right? One should also, and why are you not in service and you are in business? Because you feel you can make more money in business rather than in service, right?
Yes.
Then why are you not even taking out the money and enjoying it? And instead of thinking of putting more money, उल्टा सोच रहे हैं ना हम लोग. पैसा निकालने की बात ही नहीं कर रहे हम लोग.
Okay.
और रोज
So
thinking
sorry
in
to
business and-
interrupt. This is a
Yeah.
great insight, sir.
Thank you.
This is a great insight. If it happened tomorrow, I'll retire happily and I will do things which gives me pleasure, like traveling around the world, going to museums,
Pratapji,
taking a vacation.
the purpose of your business should be, it should lead you to earliest retirement possible,
Yes,
which
sir.
is not possible in service.
Absolutely, sir. Financial freedom is what
I
ultimately
do
everyone
business.
is working towards.
I do business only because I don't have to actually go and do work. It is not compulsion.
Absolutely,
My
absolutely.
purpose of business is to give me earliest retirement. That's it, nothing else.
And
Which
do
is
what
why
you
I
like to
keep
do,
on
sir.
mentioning. Which is why I keep on mentioning that my philosophy is profit first. You do business to earn profits, not to do samaj seva, not to do charity, not to do give employment, not to do good for the society. Take care of yourself first, then you think of society.
Absolutely, sir. I mean, there should be some ethics, but what you said is absolutely right, sir. Ethical.
I never said do it unethically. No, I never said.
Correct, correct, correct. Got it, sir. Understood.
Yeah.
Great insight, sir.
Thank you.
Yurajan.
Yes, sir.
Yeah, please go on.
Sir, good afternoon.
Good afternoon, sir.
I'm very happy. It was a great and pleasant and knowledgeable day for me in my career.
Thank you, sir.
Financial aspects. Most of the slides what you presented, and I am investing in the stock market. I have attended many classes like this, but I have taken a screenshot of all your slides. But today evening I am going to review all those things. And in the training also they used to tell what are the parameters, basic parameters which we have to look into the companies, EBITDA, P ratio, and other things. So all you have given a tree chart one thing that was very different thing. So I was even putting a question on you. First I should know when you answer, I could be able to grasp it and understand what the question I'm putting on you. But you please share your email ID and other thing. I need to have your valuable consultation with you.
Okay.
Really, it's a great day for me. We are most of I'm running business for more than 30 years, but so far I have not borrowed any money. I have started with 37,000 of my PF money, but I'm a company with a high profit and without any debts. But the thing initiated was run at others borrowing money. That was great instinct. Please, I can share this knowledge to my son. In due course of time, he can have this knowledge and he can have business. What I am following for so many years, he can have a different perspective and a new concept of business. So I'm very thanks a lot for your kind, valuable information.
Thank you, sir. Thank you so much.
Thank you.
Niyata? Okay. Anyone else has a question?
Sir, I have a question. Senthil Kumar here.
Yeah, Senthil.
Please go on, Senthil.
Please put on your video, please.
Yes, sir. Just
we can see you also.
Senthil used to work in Reliance Jamnagar, sir.
Wow. I used to visit Jamnagar when it was just taking shape.
Okay. I was there during the first phase, 98, 99.
But were you with Bechtel or you were with Reliance?
No, I was from the
Reliance employee, sir.
I was from the supplier side.
Okay. Yes, sir.
Sir, I have my own plot. I want to build a house, and the cost of the house is going to be about 1 crore. I have 1 crore money with me, for example. Should I use my own money for building the house, or I should take 1 crore loan from the bank and I'll invest my money in some other investment and multiply? So let us say I will invest my money in the mutual fund. I'll multiply and I'll take loan from bank and I'll construct my house. Which is more profitable? Which is advisable?
Okay, so that's a great question, and I'll answer it in a very simple manner. Is if you take a loan today to construct your house,
Okay.
What will be the rate of interest they will charge you? Any bank or any financial institution will charge
So around 8.6, sir, 8.6.
Now you go and check. It will not be 8.6. Have you checked?
It is what told, sir. It is what.
No. I'll tell you where the difference lies. You are confusing between the loan you are thinking of building a house, and you are confusing between a loan which is available to people as a housing loan for a under construction property.
Okay.
Now, when you are taking a home loan for an under construction property to buy a flat, example, the lending company already knows that this project, they know the builder, they know their history, they know the land is in clear title, they know the capability of the builder to complete the project on time, blah, blah, whatever it is, which is why, and they are securing that property against the loan that they are giving. It's a secured loan, which is why it is at 8.6. When they are lending to you, when you are building a business, you are building a building of your own. Are you in building business? Are you in construction business? No. So they are taking a risk by giving you money to construct your house because you are not from the construction line.
Okay.
So what can happen? You can go wrong in terms of the construction. You can go wrong in the terms of timeline. You can go in the wrong of the quality. There are so many things which can happen, which can change the timetable of the construction of the house because you are not from that business. So first, they will not charge you 8.6, they will charge you more to cover their risk. Number two is, you will have to mortgage your property to them also to take that loan. Now, let us say, even if it is not 8.6, let us say it is 10, let us say it is 11. You say, what will you do with that money? You will put that money somewhere else to earn that return. Now, the thing is, this justifies only if you are able to earn 11% or more than 11% or whatever it is, whatever is the interest which is being charged. Now, whatever you are earning more than 11% or whatever is the interest, is that something which is guaranteed? It is not. Even if you put it in mutual fund, you put it somewhere else, it is not guaranteed. Right?
Yes, sir.
Whereas what you have to pay to the bank is guaranteed. You have to pay that 11%, come what may. Yes or no?
Yeah.
So don't try to become a bank. What the bank does is, bank takes deposits from the people, which is what you are lending money to the bank. You are giving loan to the bank and they are giving you 6% interest. Your savings, your fixed deposit is nothing but a loan given to the bank by you, for which they are paying you interest.
Yeah.
They take that money and they pay you 6%, and they take that money and give it to a housing loan person, to a business loan person, to somebody else at 9%, 10%, 11%, 12%, 16%, 18%. That is where a bank earns money.
Yeah.
Now they do that only when they know that that cost of borrowing is more than cost of earning. They are earning 16%, they are paying 6%. In your case, are you sure that you are going to pay 11% and you can, with guarantee, take maybe on 13%, 14%, 15%, 18% more? Mutual fund is not guaranteed. Share market is not guaranteed. Right?
Yes.
Does it answer your question?
So if you're investing in long term, definitely will get around 10-12% in a
You
mutual
will
fund.
get is an assumption.
Yeah.
Look at the last 4 years during Corona, what happened?
It is
How
crashed.
long?
Yeah.
You never, so that is not guaranteed you will get, na?
Okay.
So if you have money, and here I am differentiating between, for a business, that is different. Here you are creating an asset, but that is an asset which you are basically going to consume by staying in that asset, your house. It is not generating money, right? In business, when I'm saying you earn 30% and you pay 16% is different. That business is generating 30%. The house you are going to stay is not going to generate anything. You are consuming that property by staying there. So it is actually generating 0% return.
Yeah.
So why pay somebody 8%, 9%, 10% when you have the money with you?
Okay.
Don't get under impression कि मैं यहाँ पे कम pay करूँगा और वहाँ पे ज़्यादा कमाऊँगा. That ज़्यादा कमाऊँगा is not a something which comes with assurance and surety and guarantee.
Okay.
Whereas this is something which you have to pay month on month. EMI वो 11% से जाने ही वाला.
Yeah.
Hope I answered your question.
Okay, sir. Thank you, sir.
Thank you.
Thank you, sir.
Arun Ramasamy.
Thank you. No questions.
Very good. Okay, I think we are done now.
We are done, sir.
Yes, sir,
That's
we are done,
great.
sir. What a
So,
fantastic session, sir. What a fantastic
you.
session, sir. You simply walk the talk, and I also take this opportunity to thank all the participants for this lively Sunday morning session, to attend this
Thank you,
lively
sir.
Sunday morning session. I take
Thank
the
you.
opportunity to thank Rajendra Sapre for having.
Yes, he is here. So Rajendra ji, if you can start your video.
Say a few words, Rajendra. Rajendra, please unmute.
Please unmute and start your video also, sir. Rajendra ji, I think, has maybe moving around here and there.
Yeah.
Because he anyways has heard me a couple of times, so he knows what is it all about.
Yeah.
But Gopi ji, I will be sharing with you the presentation.
Sure, sir.
I will
Sure.
do it in a PDF form so that it cannot be changed.
Yes, sir. Yes, sir.
Feel free to share with the participants who want.
Yeah.
With a small request that they keep it to themselves and use it for their own benefit.
Yeah.
Rajendra ji, if you're around, you can maybe switch on your video. So we had a long Q&A session also, which was interesting.
Yes, sir. Hope you also found it interesting too.
Yes. And if any of you who are still here on this session right now, if you have connects where you would like me to come and give us similar kind of a session with some of your associations or other groups or something like business groups or something like that, you can let me know or through Gopi ji, and maybe we can take it forward from there also.
Will do, sir. I will also ask a couple of other associations, sir.
Yeah, please, because that is my way of giving back to people where I can give some education and knowledge.
Sure.
Sir, one small question. Can I put for video?
Yeah, please.
Sir, I'm investing in the stock market, which is related to that. With regard to I'm under good profit during these prices or the market is high. How to book a profit, sir? Any idea regarding this, please?
Is it the question how to book a profit, or is the question when to book a profit?
Suppose the market may crash 20% or 25%. For the time I can book that 20% profit. Then when the market comes in the particular stock, again I re-enter in the lower price.
Yeah.
So I cannot lose that because some of the consultants says that when the market is in the parallel for 1 or 2 years or 6 months or 8 months, so I'm losing that period. And when the market booms, I'm at the high, but that stock falls from the high to low. So that I have not made any profit. Though I'm a long-term investor, I'm profitability portion in the particular periods.
So now I have one question, sir. Whenever you are investing in the stock market, you get dividends?
Yeah, I'm getting dividends.
Oh, so that is one, whether you like it or not, you are still getting some returns, whether you are taking it out or not. Number one. Number two is when you invest, what is your expectation of return?
Minimum 20%.
Minimum 20%. Minimum 20%. Let it be. Everybody will have their own figures. So I'm not saying whether it is right or wrong. 20% is your expected return, which you expect from the investment you are making in the stock markets for a longer term.
Yes, sir.
Now the question here is, like today when the markets are on the high, though for the last week they are low, but otherwise they are at a historic high. What is your portfolio return right now? Is it 20%, more than 20%, less than 20%?
It's under 60%.
60%. Now that is a portfolio return.
Yes, sir.
You go into the portfolio and you look at each and every share script. Some will be at 27%, some will be at 82%, some will be at 17%. My question to you is, any share which is at the return of more than 20%, which we expect today, and most of them will be because the whole portfolio is at 60%, you book your profit. So what you do is you take 20% out.
Okay.
So your portfolio return is at 60% right now. Even if you take out those 20%, your portfolio return will still be at 40% overall.
Yeah.
But you would have booked your profit.
Okay.
Take that out, keep it yourself, enjoy yourself if you want, or wait for a right opportunity when the markets come down, you can reinvest them again.
Okay, sir. For the time being, as earlier you said, we have to make a corpus for our retirement or whatever the age-old time.
Correct.
Put this money, whatever the profit we are booking, sir.
That is your return. You build your retirement corpus, sir.
Okay.
You build your retirement corpus from that.
Okay. You can make a presentation exclusive on this also, sir, because most of the thing, whatever we work for a period of 30 years, 35, 40 years, it's money. But knowledge, most 90% of the people, they doesn't focus on the money, and many putting in the wrong direction, and that doesn't give much of a return. Because
there is a session called "What's Your Number?" The name of the session which I conduct is for people who are just 5-10 years away from retirement, either in service or either in business or either anywhere else. Who have started thinking about retirement now. Okay, abhi retirement aane wala hai 5 saal ke baad, retirement aane wala hai 10 saal ke baad. Think about retirement, plan for retirement, do this, have to do that, make some arrangements, blah 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 blah, whatever. The name of the title of that particular session is called "What's Your Number?" Now, if I meet you first time, Yuvarajan sir, either online or in person, and I shake your hand and we introduce each other by name, and I ask you a question, "What's your number, sir?" What is it that you are likely to do? Will you share your mobile number? Will you share your Aadhaar number? Will you share your PAN number? What will you do? Maybe you will share your mobile number. But what I'm asking you as a financial consultant is, when I ask you this question, "What's your number?" I'm asking you, do you know what is the amount that you should have as your retirement corpus? That is the number I'm.
First time I'm hearing this, really, I should plan accordingly. Very thankful.
So now my question here is, for everybody who is still 29 of you who are still there, is, do you know what's your number? Do you know how your business is going to help you achieve that number? And do you know how and when your business is going to achieve that? Which will make you financially free. Then you do business because you enjoy doing business. You don't do business because you have to do business.
Yeah.
You can still continue doing your business, but you are not dependent on the income coming from business.
Yes.
Then you do business for charity. You do business to serve the society. You do business to give employment to your people. No issues. But you have taken care of yourself first. When you go on a flight, they show you that security drill of, when there is a turbulence, oxygen mask and all. There is one sentence which many people ignore because we go to flight so many times, wo chalu hota hai, hum log idhar udhar dekhna shuru karte. There is one sentence which they say that in case of an emergency, even if you have your own kid sitting in your lap, you put on your mask first and then put on the mask on your child. Not the child first and then you. Your business is your child. But if you put on the mask, the oxygen mask to them, and you die because you don't take oxygen, your business is going to die.
Right.
If you survive, then you can make the business survive or you can create another business also.
Right.
So the point I'm making here is, if you don't take care of yourself, if you don't build up that retirement corpus for yourself from your business, who is going to do for you? Your vendor is not going to do for you. Your supplier is not going to do for you. Your employees are not going to do for you. Your government is not going to do for you. Your auditor is not going to do for you. Nobody is going to come and help you except yourself.
Okay.
Which is why you should know your number.
Very informative. In a different angle. First time I'm hearing this. Really, I'm very thankful to. Thanks a lot. Thanks a lot.
Thank you, sir.
We make our own numbers.
You should know your number.
Okay. Thank you, sir. Thank you. Thank you.
Thank you.
Sir, with the
Thank you,
continuation, with the continuation to Mr. Yuvarajan's question, sir, the same in the portfolio, you told if it is, his expectation is 20%, and if it reaches 20%, better to take out the 20% margin, book a profit, and reinvest whenever the loss comes. Suppose If the loss comes after a period of 6 months, then he has to wait with the 20% money, sir.
Sorry, come again.
He is booking a profit of 20%.
Out of 60%. Out of 60%.
Out of 60, yeah, out of 60%. Yes.
So that is.
And he has to wait when the market again low and to reinvest to start a thing.
Padmarajan sir, you somewhere lost the whole thing. I am not saying reinvest. That is the amount which you should keep for your number. आप सब कुछ अगर इन्वेस्ट ही करते रहोगे या तो स्टॉक मार्केट में या पूरा बिजनेस में अपना पैसा अपने लिए कब निकालोगे?
So
today you are at 60. Today you are at, let me finish. Today you are at 60% plus. You are happy.
Yes.
Tomorrow you are at minus 20%, and that is the time you decide, I want to retire. What are you going to do?
Okay. Yeah, it is absolutely correct. What I am taking 20%, you are telling me to keep in the retirement corpus. Retirement corpus, where it will be as a fixed deposit or what, sir?
So that's a separate topic altogether. It will all depend on what is your. It will all depends on what kind of retirement life you want to enjoy.
Okay.
You can put it in FD. You can put it into your senior citizen schemes. You can put it into PPF. You can put it into so many other places. So it's a separate topic altogether. How to deploy your retirement fund. You have your annuity plans from LIC. There are so many options.
Okay.
People who retire, they do put money here and there, in 10 different places. You do the same thing.
Okay.
But again, it will depend on individual to individual. So again, that is a separate topic altogether.
Yeah, I understand. Thank you, sir. Really great knowledge. Because if you see, most of us all are engineers, and we know about how to design, how to execute, and like
Sir,
this.
my question here is engineer or retirement instead of engineering only. Use your engineering knowledge to engineer a retirement corpus.
Yes.
Design your retirement corpus. Build your retirement corpus. Produce your retirement corpus. I'm using your own language. Design, produce, create.
Yes. Thank you, sir. Really great, sir.
Thank you.
You've done a wonderful job to giving back to the society, sir.
Thank you. Rajendra Sapreji, are you there?
Rajendra, you're still around?
Yes, sir, I'm there.
Sir, good afternoon.
Greetings. Yes, good afternoon. It was a pretty good session, wonderful
Thank you,
session,
sir.
and good Q&A.
Thank you,
I'm
sir.
really happy. That's
Thank
why it was a
you.
privilege
Thanks.
to actually introduce you to the forum.
It was my privilege to be here, sir. I'm really thankful.
Great.
Great, sir. Great, sir. Okay, sir. Yeah.
Thank you. Thank
If
you
there
very
are
much,
no
sir.
further questions, yeah, we will come to the end of the session.
Yeah.
Have a nice
Thank you. Thank you so much, sir.
Bye.
Have a great day ahead, sir.
Bye. Bye. Thank you.
Thank you,
Thank you,
Gopiji.
sir.
Thank you, everyone. Bye.
Thank you.
Gopiji, you have recorded this session, I believe, right?
Yes, I'll share the recording, sir.
Please, sir. Thank you so much. Thank you.